Hello, DeFi people. Did you subscribe yet? There's a monkey with a keytar laser right here, and you're still on the fence. What's wrong with you? I bet you were waiting for the euro to reclaim its dollar peg, weren't you? Well, you're in luck, because that's exactly what just happened. We can breathe a sigh of relief as, after 20 young lurs are fretting over that precious 1-to-1 ratio, stop it, it has returned. I meant to say long years, you know that. It's not crypto, but it is important for crypto because the surging dollar impacts everything, literally everything, and Bitcoin is no exception. All the facts, deets, and cheat sheets for the steep seats of meat space coming up. Unlock the value of your NFTs without selling them. Liquid is a game-changing NFT marketplace that enables the lending and borrowing of blue-chip NFTs. The platform allows individuals to make their blue-chip NFTs liquid by borrowing against them directly. In turn, Liquid unlocks a peer-to-peer lending opportunity for crypto holders wanting to earn passive income on their capital, which will be backed by the value of the borrower's NFT. NFTs are here to stay, and now you can make the most of it by either lending your crypto out or by simply unlocking the liquidity of an NFT you already hold without selling it, freeing you up to buy the dip. So, fact one, the euro was last worth the same as the dollar in December 2002, 20 years ago, shortly after the currency was established. 19 European countries use the euro right now, and that is a lot of GDP to make a mess of. And of course, we're looking to the Fed's interest rate hikes, which have made the dollar bill a safe haven for investors everywhere looking to protect against surging global inflation. So, what are the likely consequences of this? Well, if you're American, the dollar's rise will help to somewhat ease the pain caused by 4-decade high inflation. But for Europeans, like me and her and him, this will make traveling more difficult and exacerbate the effect of rising consumer prices. Nearly half of all goods imported into the Eurozone are invoiced in dollars, compared to less than 40% in euros, according to Eurostat. Fact two, oil and gas, well, they're traditionally paid for in dollars, and the price of both has gone bananas in recent months thanks to Russia's war against Ukraine. Now, the effect of the decline in the value of the euro varies depending on how reliant your business is on foreign trade and energy. If you're exporting outside the Eurozone, prices are going to be more competitive, so you're likely to benefit. But if you are an import business, it's going to make things tougher. But all of this has to be balanced against the rising price of commodities precipitated by, yes, the war in the Ukraine. Now, while the Fed has been ramping up interest rates, the most aggressive move seen since 1994, the European Central Bank has been markedly reticent to follow suit. But rumblings seem to suggest it is preparing to tighten borrowing costs for the first time in 11 years in July. But of course, this raises the specter that the central bank could end up hiking rates in the midst of a growth slowdown and end up fueling a recession. And now for your final fact, let's go all the way back to 1973, before this guy was even born. Imagine that. When Nixon and Kissinger struck a deal with Saudi Arabia to denominate all oil sales in dollars, in exchange for which the US would supply weapons and protection to the Saudis. How does that look now? Massive increase in demand for dollars and the birth of the petrodollar. Petrodollars effectively allowed the US to export its inflation, as these dollars, well, they never return to the US, but instead circulate worldwide and are used strictly for foreign trade. So yes, the US, as much as the money printer is going, it can just export that inflation overseas. Pretty simplified version of events, but you know what I'm saying. Compare Russia's demand that sales of gas be denominated in rubles, and you get a sense of how Putin is thinking. Now, with the latest CPI data due to be released today, Wall Street was battling a red market yesterday, which inevitably had a knock-on to Bitcoin and the rest of the crypto markets. Now, the rumors are that inflation is believed to have topped, with the Fed likely to ease rate tightening in the autumn. But that is still a few months away, so expect more uncertainty. Full retraces the usual nastiness. That's it for today. Just your friendly neighborhood supermassive dropping facts like Tic Tacs to freshen up your day. Have a good one. I'll see you on the next one. Peace!